AI is here, and whether you realize it or not, it's already starting to change real estate. Not 5 years from now, right now. If you're a real estate investor, you're probably wondering what that actually means for real estate investing. Because when you look around, you're seeing jobs changing, entire industries being disrupted, and a lot of uncertainty about what the future looks like. So it's only natural to ask whether real estate is any different. Is real estate investing going to hold up over time? Or is it going to be disrupted the same way we're seeing in other areas? And if you're thinking about investing or already investing, is this still worth your time and energy? Or are you building towards something that could look very different a few years from now? So instead of trying to make bold predictions, I want to walk you through how I've been thinking about this, what seems to be holding steady, what already appears to be changing, and how I think about positioning going forward. When I think about how AI might impact real estate, the easiest place for me to start is to think about what's not going to change. Not because I'm certain these things won't change, but because they've been very consistent over time. Real estate at its core is still a physical asset. It exists in a specific location, and that location still matters. People choose where to live based on jobs, schools, lifestyle, and community. And those are things that don't tend to shift overnight, even when technology changes. And at a very basic level, housing is still a necessity. People need a place to live, whether the economy is strong, weak, or going through some kind of transition. AI can change how work gets done. It doesn't eliminate the need for housing. Another thing that seems unlikely to change quickly is the idea of scarcity. There are only so many desirable locations, and that supply doesn't expand very easily. You could build more housing, but you can't easily recreate location. And historically, that's been one of the main drivers of long-term value in real estate. So when you step back, AI doesn't make real estate irrelevant. The core reasons it works are still intact, but that doesn't mean nothing is changing. And this is where most investors aren't paying close enough attention. Now the next question is, what's already starting to shift right now? And this is where AI is having a more visible impact. What I'm seeing is changes happening in two main areas: the operational side of real estate and how deals are analyzed. On the operational side, property management is becoming more automated. You're starting to see AI used for things like tenant communication, leasing inquiries, and even parts of the screening process. That leads to faster response times, fewer missed opportunities, and in many cases, lower operational costs. Over time, those improvements compound. The second area is how investors analyze deals. Data is becoming more accessible, and tools are getting better at pulling comps, analyzing markets, and identifying trends. So instead of relying on slower, more manual processes, investors can move faster and evaluate opportunities more efficiently. And here's where the advantage shifts. When everyone has access to better tools, the advantage doesn't disappear, it changes. It becomes less about who has access to information and more about who can recognize opportunities and act on them fast. You're also starting to see changes around prices and efficiency. As systems get better at optimizing rents and occupancy, and investors get better at analyzing deals, properties can be run more tightly. That's good for operators, but it also means fewer obvious inefficiencies in the market. And historically, opportunity in real estate came from finding and improving those inefficiencies. So in the near term, AI isn't disrupting demand, but it is changing how business runs. And over time, that makes it harder to find great deals. And this is just the beginning. Beyond the next year or two, it becomes a lot harder to predict exactly how all this plays out. But I think we would all agree that AI is going to expand into far more areas than just operations and analyzing deals. To bring some structure to this, I've grouped it into 5 broad categories. The first is operations. What we're seeing today is basic automation, but over time, this will likely become much more integrated. Property management systems may start making real-time decisions around pricing, maintenance, and tenant communication with much less human input. For rental property owners, that could mean running properties more efficiently with less time involved, but it also raises the bar for what good operations looks like. The second is finding and underwriting deals. Right now, AI is helping investors analyze deals faster, but this will likely evolve further. Instead of just analyzing deals, systems may start surfacing opportunities based on your specific criteria. For high-income professionals with limited time, that sounds like a big advantage, but it also means more people are looking at the same opportunities at the same time. The third is capital and financing. Lenders and institutions are adopting these tools as well, which means underwriting loans and assessing risk becomes more data-driven. That can make the process faster, but it may also mean stricter underwriting criteria and fewer exceptions made by individuals. If you don't fit the model, it may become harder to get deals done the way people have in the past. The fourth is development and supply. AI is starting to show up in how projects are designed, planned, and executed. Over time, that could improve timelines, reduce costs, and make development more efficient in certain markets. It doesn't remove constraints like zoning or land, but it could gradually increase supply in areas where those constraints are less binding. The fifth is demand and how people choose where to live. If AI changes how people work, it could influence migration patterns, housing preferences, and what people value in a property. We've already seen this with remote work, and AI could push those trends further. For investors, That creates both opportunities and risks depending on where you're investing. And there's one more piece to this, and it's the one most people miss. As more parts of real estate become more efficient and more data-driven, I could see relationships becoming more important, not less. Because when everything becomes easier to analyze and more competitive, the best opportunities may not be the ones that show up in the data. They may be the ones that come through relationships. Even today, some of the best deals go to the people with strong networks and long-standing relationships. And if AI makes the obvious deals more competitive, those relationship-driven opportunities may become even more valuable. AI may increase efficiency across the board, but it doesn't mean it replaces the human element. In some ways, it may elevate it. Zoom out even further, and the picture gets less certain. Because at that point, you're not just talking about how AI affects real estate, but how it affects the broader economy, jobs, and how people live and work. And that's where there are a lot of different possibilities. AI could increase productivity and create more wealth, which would generally support housing demand, or it could create more volatility in income, depending on how different industries are affected. It could change where people choose to live and how often they move and what they value in a home. And the reality is, it's probably not just one of those outcomes, but a mix of them playing out in different ways across different markets. So instead of trying to predict the outcome, I focus on what holds up across a wide range of scenarios. Things like owning quality assets in good locations, investments that are tied to fundamental demand, where people will continue to need housing regardless of how technology evolves. And just as important, assets and strategies that give you some level of control over your income rather than being completely dependent on external systems. And relationships, because even in a more data-driven and efficient world, real estate is still a relationship-driven business. Who you know, who you work with, and the opportunities that come through those relationships can matter just as much as anything you see in the data. So position yourself to hold up reasonably well, no matter how things evolve. That's the goal. So what do you actually do with this? I think the key here is not to overreact, but also not to ignore what's changing. The first thing I would focus on is becoming a better operator. Because if AI is raising the baseline for how properties are managed, then just being average is probably not going to be enough over time. The second is focusing on the quality of the asset. AI can help you analyze deals and run numbers, but it doesn't fix a bad location or a weak property. That discipline matters more now, not less. Third is learning how to use the tools. You don't need to become an expert, but ignoring them probably isn't a great strategy either. Even a basic understanding can give you a meaningful advantage, especially early on. The fourth is to learn how to act quickly. As things become more efficient and more competitive, good opportunities may not last as long. That doesn't mean rushing into deals, but it does mean being prepared to act when something makes sense. And the last one, which we talked about earlier, is relationships. Because if more of the obvious opportunities become competitive, the less obvious ones become more valuable. And those often come through the people you know and the networks you build over time. AI is probably going to change how real estate works in a lot of ways, but it doesn't change why real estate works in the first place. The fundamentals are still there. What's likely to change is the environment around it and the expectations of how well you need to operate. That makes it more important to be intentional, more selective, more strategic. Focus on a quality asset, execution, and the right people around you. Because as things become more efficient and more competitive, relationships and community start to matter even more. AI can analyze deals and improve systems, but it can't replace trust, shared experience, and relationships that drive the best opportunities in real estate. So if that's something you're looking for, we have a free public real estate investing community where you can connect with other investors, learn, and start building those relationships. And if you're at the point where you're ready to take the next step and want help building a real estate investing strategy that fits your situation, we also offer free strategy calls with our team. That's a chance to step back, look at where you are, where you want to go, and what the right next step might look like. You can find links to both of those below. Thanks for watching, and I'll see you in the next video.